This is James Altucher at TheStreet.com TV, and I'm here once again with the shy young hedge fund manager, Jim Cramer, who also writes a daily column here on TheStreet.com. Jim, I wanted to ask you about something in your book, actually. Right. You talk about how you like companies that are maxing out their share buyback programs. Right. And there's a lot of pros and cons, because the criticisms of share buyback programs, which I don't agree with, is that the companies don't know what to do with their money, so they're just doing this. But what's your
Well, there's
take?
a couple reasons. Remember, it's a tax advantage thing. We know that. It's also a great way to be able to stabilize your stock. See, I look at the market and say, if we're in a period of high volatility, I really want that safety net. We've entered again into a period of high volatility, not as much as we used to be, but it could happen. And I like the idea that a company is putting money to work quietly. And these buybacks define that. Would I prefer dividend boosts? Yes, because I think dividends are the greatest part of the whole investment game. But I want the company to deploy capital, and the idea that it doesn't know what to do with its money, that's foolish. Anytime you shrink the float, you really get better numbers. And that's what we want, is better numbers.
Well, let me ask you about dividends versus buybacks.
Right.
In a dividend, you're returning money to investors, but they're paying taxes on it. In a
Right.
buyback, you're returning money to investors, sort of, and they're not paying taxes.
Well,
on it.
sometimes I think that a buyback helps the exit people. I don't want to do that. I want the people who stay. And it clearly benefits people who exit. Also, it tangentially benefits people who stay. Dividend, the taxes are very low with dividends, but yes, there's double taxation in America. What I like, and what I think it's important to point out is, for instance, I met with Jeff Immelt, who's the CEO. No, I call him terrific. I hold it that because people know I take a paycheck from CNBC, which is owned by GE. But where I said it would be a great statement. You raise it 9% every year, their dividend. Raise it more, and even if it means cutting back the buyback. And they didn't cut back the buyback, but they did raise the dividend more. Strong signal that management says, look, we've been doing well, we're going to do better in the future. I really like that.
Well, so I set up a portfolio of stocks that are not just announcing buyback programs, but have also significantly bought back shares over the past year.
Right.
And I based it on the metrics you mentioned in your book. And so I wanted to ask you about some of those stocks.
Sure, because I love that portfolio and have been trying to figure out how to integrate it in some of the things that I'm working on.
Well, IBM bought back $8 billion worth of stock last year.
IBM deeply committed to its own stock price. Deeply committed to the notion that it's a consulting software company that gets a hardware multiple and is anxious to try to change that. It hasn't had much luck, even though it got the personal computer division to Lenovo. I think what IBM needs to do is combine that buyback with a serious, larger acquisition. It's done a lot of fill-in acquisitions, and until that, it's not going to get the respect that it needs.
What could be an acquisition for them?
If Symantec were better run, it would be terrific if they bought Symantec. I was disheartened. Symantec on its conference call yesterday made this acquisition. It was just another one of these trying to defend Veritas, this will help us, all hollow. Management there is tired. That would be a great acquisition from someone who wants to go head-to-head with Microsoft.
Okay, Disney bought back $7 billion worth of stock last year. In
Total
part
commitment.
To get the Pixar shares out of the way.
Right. But Disney really benefited from that buyback. At first, there were too many shares sloshing around, so to speak. But I felt that Iger has sent the company in a new direction. It's very pro-shareholder. I had always felt that the previous regime was pro-executives. This is a nice change of pace, and Iger's doing a lot of right things. He also, by the way, the Pixar thing was, everyone thought was wildly dilutive. It's just generating too much cash for me to think that.
And Texas Instruments bought back so many shares they reduced their share count by almost 10%.
Now there's one I wish wouldn't do it. Because they have so many end markets that they could dominate with that cash. But they walk around every day talking about how undervalued their stock is. It is interesting, on a so-so quarter, their stock is up 10%. That may very well be a shrinkage of the float that makes people think, well, you know something? They have more conviction than I do. Maybe I should reopen the book on Texan and take a hard look at it.
So I just want to mention that we set up this portfolio, and it's, if you search on Mad Money Buybacks, you'll find this portfolio. We'll also be updating it every week or so. Every 2 weeks, definitely, we'll be updating it. And if you bookmark the portfolio by rating it, you'll get email notifications every time we've updated it. So thanks once again. This is James Altucher at TheStreet.com TV, and thanks, Jim.
Thank you.